Welcome back. Now, despite the massive economic challenges Nigeria is currently facing, the Institute of International Finance says prospects going forward have improved. This is contained in a recent report by the Institute tagged Nigeria Recession Bites. The Institute of International Finance, with headquarters in Washington, D.C., is a global association of the financial industry with a mission to support the financial industry in the prudent management of risks, to develop sound industry practices, and to advocate for regulatory, financial, and economic policies that are in the broad interests of its members and, of course, foster global financial stability and sustainable economic growth. I'm now being joined by the senior economist for Africa Middle East Institute of International Finance, Gaius Gorkent, joining us from Abu Dhabi. Good afternoon, Gaius. Thank you for joining us on the program.
Good afternoon.
Now, despite the biting economic challenges in Nigeria, you see some improved prospects. Tell us about these prospects.
There have been policy changes, policy improvements, and that we believe will help kickstart economic activity in 2017. Prime among those changes is, of course, the shift to a flexible exchange rate, more flexible exchange rate regime, and that should trigger investment and growth eventually. But you've also had, of course, a stabilization in oil prices. So if you compare the price level for oil in January to now, of course, oil prices have rebounded significantly, and they've stayed reasonably at a stable level. Now, production, of course, had come down also sharply, particularly in May, and since then, oil production has also rebounded, albeit it remains still below capacity. So going forward, if oil production can be maintained, if dialogue can be maintained with the perpetrators of some of the acts of sabotage and so on, then that will have a significant bearing, of course, in terms of oil exports and revenues. We've also had, of course, changes in terms of the fuel pricing regime. Fuel prices were increased, and that helped ease the shortage of fuel, which was a big issue, particularly in the second quarter, and it significantly affected economic activity. There's still some shortage of course, foreign currency. There's still capital controls. So there's still a number of things that are hurting economic activity. But I think the broad path is the thrust of economic policy is now going in the right direction. We welcome the recent announcement to establish a committee to improve the ease of doing business in Nigeria. So we're more hopeful for 2017.
Right. You are projecting the economy to contract by 1.4% in 2016 and, of course, to rebound by a modest 2% in 2017. That's still in line with Moody's projection. Now, your report noted that all sectors have been hit hard except agriculture. Now, this investment, the much needed investment, or this growth that you are projecting, is it going to come from agricultural sector?
Agriculture, of course, is very, very important for the Nigerian economy. It constitutes about a fifth of the Nigerian economy, but it's not enough by itself to propel, to carry the entire economy. You need a pickup in the manufacturing sector. You need a pickup in the services sector. The latest readings for the purchasing managers' indices are, of course, are still indicating a contraction in manufacturing activity because of shortages of parts, because of FX scarcity. Services are doing a little bit better, but also struggling. So, the growth we think will be a rebound from the low baseline effect that we're seeing right now, and it will be broad. It will not be just the agriculture sector. The agriculture sector, of course, is benefiting from two things. One is positive policies that are helping agricultural output growth. You've had import substitution policies which have encouraged domestic production, and there's also been relatively good weather. So the combination of those two factors have helped agricultural output growth.
Right. Just before I let you go, guys, we've seen inflation rate surge here in Nigeria, and of course, the central bank has continued to tighten its monetary policy. The Monetary Policy Committee will be meeting next week. What do you expect to see? Further tightening?
Well, they increased the monetary policy rate recently, just in the last month or so, or just over a month. And since then, of course, the inflation readings have continued to pick up. The latest reading was just over 17% on a year-on-year basis. We think that inflation is going to increase further in the coming months, and we wouldn't be surprised if it reaches around 19%. So, under those circumstances, it would not be surprising if the Central Bank of Nigeria increases the policy rate so as to discourage inflationary expectations from building, because right now, of course, you have a negative real rate environment. And so I think the central bank wants to stabilize expectations.
All right. Thank you very much for your time, Gayas Gokent, Senior Economist for Africa, Middle East Institute of International Finance. Let's quickly move over now to the FMDQ Forex intraday today. Of course, as financial markets are now open for business after the long holiday. I'm being joined by an FX dealer with UBA Group, Austin Okbala. Good afternoon, Austin.
Good afternoon, ma'am.
Right, it's the first trading day after the holiday. How is the Naira doing today?
Okay, today market open at 314 Naira 50 kobo to a dollar, and it has been trading at the same range it's open. Market has been a bit stable from the rate we have seen.
Okay, thank you very much for that, Austin. Now, let's take a look at the oil market. Of 2 months after force majeure was declared on exports of Nigeria's premium crude oil brand Kwaibo, ExxonMobil is offering a cargo of the oil grade to be loaded in October. ExxonMobil declared force majeure on the grade in mid-July after a leak on the pipeline that feeds the oil to the export terminal. According to the company, the cargo is offered for October 8th to 16th and will be loaded at a premium of $1.08 per barrel. ExxonMobil says the force majeure remains in effect but did not give a time frame for the resumption of regular oil flows. This comes about a week after Royal Dutch Shell lifted the force majeure on Bonny Light crude and the Forcado grade. We'll take a quick break. When we return, we'll look at the activities of the fixed income market. Do stay with us.